Chegg, the education technology company, reported fiscal year 2022 third quarter results, and the market really liked what they saw. The stock was up more than 20% on the day following the announcement. So let's look at what the stock market liked so much from Chegg's third quarter results. The main theme here was that college enrollment rebounded. Overall revenue, though, decreased by 4% in the third quarter to 164.7 million. This was more so due to a divestiture. The education technology company divested away from the rental textbook business, and so that caused revenue to decrease year over year. However, underlying services revenue growth increased 8% year over year. Now, because of the divestiture of the textbook business, services are 97% of revenue, and services come with higher gross profit margins and lower necessity for capital investments. Earnings per share of $1.23 was up incredibly from the 5 cents per share in the same quarter last year, but this also came with the asterisk. This was mostly due to a gain from a extinguishment of long-term debt. The company used $400 million to retire $500 million in debt at a favorable price, and it also released some reserves for a tax benefit, and so that's what caused earnings per share to jump so much. In fact, net profits was higher than revenue, which is rare, and it was for these one-time events. Still, it was an impressive quarter for the company, with services revenue jumping, and at 4.8 million subscribers, that was 9% higher year over year, even though the company instituted a $1 per subscriber increase. Now, $1 is significant because typically Chegg sells its services for somewhere around $14.99 per month. So $1 is a little less than 10% increase in pricing. What that did was it not only did not have customers cancel their subscriptions as much as they thought they would, but it also encouraged more customers to sign up for the Chegg Study Pack, which is a bundle of its services. Instead of $14.99 per month, that's closer to $19.99 per month. So the increase of $1 pushed more subscribers to the bundled service, which had the effect of lifting average revenue per user for Chegg's business. And the major theme here, the major positive theme, was that undergraduate enrollment at colleges has recovered to pre-pandemic levels. If you're not aware, after the onset of the pandemic, college enrollment started to decline because going to college is hard enough as it is, and it becomes even more harder if you're trying to do it during a pandemic. So many students decided to take a semester off, or if they were going to college, instead of taking a full course load, they were taking less courses, they were taking easier courses, and this was not good news for Chegg's business. And so now that enrollment is rebounding, that's great news for Chegg stock investors. In fact, this tailwind could last for several more quarters because students that delayed taking classes are now having to make up for that. So now they're taking even more classes than they would normally do to make up for lost time during the pandemic. Now, one of the things that management is doing is expanding its TAM, which stands for Total Addressable Market, through offering some job skills preparation courses, and they made an acquisition of a language learning company. So students that want to learn a new language, or just anybody who wants to learn a new language, can do so with Chegg, and that expands its total addressable market because previously the only customers that Chegg could target were college students. And so now with these expanded offerings, they could go after a bigger base of learners, right? Not just college learners, but just a bigger base of learners, people who want to learn new skills and people who want to learn a new language. And so now that's a broader customer base, which is good news for Chegg stock investors. Another initiative the management has undertaken is localized pricing. Previously, subscribers from all parts of the world had to pay the same price for the subscription. Now Chegg is rolling out local country pricing in local currencies, and the initial results in Turkey are positive. They experienced a major boost in downloads, in signups, in subscribers from this region since they initiated and implemented local area pricing. This has more legs to run. Chegg can continue rolling this out to more countries worldwide, and that could bring a boost of international subscribers. Right now, of I would say more than 75% of Chegg subscribers are coming from the domestic market, the US and Canada market. And so having these local area pricing could help fuel subscriber growth from around the world. As I mentioned earlier, Chegg repurchased 500 million in its debt for 400 million in cash. So they got a good deal in retiring some of its debt. This could also reduce its interest expense, and it was also convertible debt. So this will also help reduce potential dilution in the stock in future years. So they got a good deal on this, buying it back for 4 million, a prudent use of cash from management. And as of September 30th, Chegg had 1.2 billion in cash and investments, so the company is not hurting for cash. They actually have more cash than they need, and so they're using it profitably in retiring some of its debt. They also bought back a lot of their shares. And the company runs on an asset-light business model, so it's conducive to positive cash flow generation. All right, Chegg has been one of my top stocks to buy, one of my top recommended stocks to buy. Even before this announcement where the stock bounced 20%, I had been recommending Chegg stock as a buy. And this quarter's results just reiterates my recommendation for Chegg stock as a buy. The company has an asset-light business model, benefiting from the fact that it pays once to create this content that students can learn from, and students can benefit from this for several years down the line. It also acts as a low-cost acquisition tool because students type in the help they need in a search engine, and if Chegg has the content, their website pops up and they have a new subscriber. They don't need to spend a lot of money on sales and marketing campaigns to attract customers. And so profitability is up, operating profit margin is expanding, revenue has been expanding over the years, management expects profitability to continue rising, and all things point in a positive direction for Chegg. So I still recommend Chegg stock as a buy. All right, so that's all I've got for this update on Chegg stock. Thank you for watching, and if you gained some value from this video, please hit the like and subscribe button. It'll help me make videos just like this one. Thanks for watching. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/parkev to get your 10 stock picks now.